Hi, this is Kerry Artek with Wicked Stocks, bringing you weekly analysis in the DIA, QQQ, and IWM. The DIA being the Dow Jones ETF, the QQQ, the Nasdaq-100, and the IWM, the Russell 2000 ETF. Before I jump into the charts, please click like, subscribe to the YouTube channel. It'll provide notifications when these videos have been uploaded to YouTube. I would encourage you to become a Wicked Stocks Basic member. There's no cost. You just provide your name and email address, and you'll be notified by email each and every time a new video is ready for viewing. Just FYI, this weekly series that I'm presently doing in the DIA, the QQQ, and the IWM will go to Wicked Stocks members first, starting next week, and then to the YouTube channel shortly thereafter. And by shortly, this particular video, the DIA, QQQ, IWM, will go out every Sunday afternoon to Wicked Stocks members. And then for YouTube channel subscribers, later that evening, by the first trading hour Monday morning. I just want to create a soft incentive for becoming a Wicked Stocks Basic member. We've got a lot to offer. You'll get one free stock pick a week. That's part of the basic membership. I do sometimes 4 stock picks a week. The balance oftentimes goes into the premium part, the paid part of Wicked Stocks, but I'm not selling you on that. I'm just encouraging you to become a basic member. I will not flood your inbox with marketing offers. I can assure you, I really don't do a lot of marketing. Most of what you'll receive will just be notifications that this video is ready to view, this stock is ready to view, so forth and so on. So let's jump into the charts. Let's start with the DIA. These are all weekly bar charts, by the way. And so I'll keep it simple. And if you've been watching this video for the last week or two, you do know that we have a meaningful channel resistance up above this week, climbs ever so slightly, I think about 20 ticks. It was 359.19 as I recall last week, 359.39 this week. That is our midterm resistance. In other words, midterm for me is out 2 to 3 months or so. Holding below 359.39 does allow this market to fall back over the next 1 to 3 months to long-term support that begins at 343.89. I'll get to that in a moment. But I just want to emphasize that holding below 359.39 will keep a cap, if you will, on buying pressures for the DIA moving into November trade, and we can fall off from here. But if we close above 359.39 at the end of this week, and I want to qualify that with a 1% violation, honestly, I think if you add roughly 3.6 to 359.39, I don't have the number in front of me, but you can do the simple math. That would be the sort of the clarifier. That would be the full sort of confirmational buy signal that I think over the following 2 to 3 months should yield bullish continuation to that 390.19 channel top. And that's a meaningful long-term resistance area. We did test the channel bottom about a month ago, that channel formation at 343.89 when it was lower in value 4 weeks ago. We did test it. And obviously it did hold, and holding above, actually, that 343.89 channel bottom will keep the 390.19 channel top in reach. The timing of that is difficult. The accelerator is a settlement above 359.39. But until then, we could trade for the next 1 to 2 to 3 months inside the 359.39 ceiling all the way down to the Dow floor that I have now at 337.06. This formation. This is the horizontal channel bottom to that 359.39 horizontal channel top. And on the way down, you have long-term support also at 343.89. The way I consider that support area, 337.06 to 343.89, is a range of support, able to absorb selling through the first quarter of next year, and from there we can trade higher. If we close the week below 343.89, we have a tentative sell signal, but I wouldn't feel comfortable being an aggressive short position player or playing the downside in this market unless we actually violated and settled below 337.06. I think that could be a trap. Closing below 343.89 could be a bear trap. In other words, you could get short or liquidate a long position you may have been holding for a while and we tagged 337.06 the following week, and then we rally back up to 359.39 within 3 to 5 weeks of that. And it's just a scenario that I'm sort of expressing. Obviously, we don't know what will happen, but let's put it this way. If 312.83, that long-term support that could contain selling through next year, if it were to be tested, I wouldn't feel comfortable predicting that unless we actually settled below 337.06. And once again, closing above 359.39 at the end of this week would then indicate 390.19 within several months. Let's talk just the intermediate downside this week, and that's the last Dow slide I'm going to show, the last DIA, and that is the high of the low from about a month and a half ago, 348.67. That level, if tested this week, offers decent weekly support. And if we were to close below it, then of course we have that 343.89 long-term channel bottom. Let's move on to the triple Q. The triple Q, I can show this. We actually had a buy signal a few weeks ago. If you've been watching this, I'd mentioned when we settled above that descending two-thirds speed line 2 full weeks ago. It is now at 361.09. That's a descending two-thirds speed line. And at the time, very similar to the SPY, as you recall, I was anticipating that long-term resistance at 402.73, which I think is now a week or two away. I'm going to say 3 at the most from being tested, this given the presently heightened volatility and the fact that we settled last week above the 382.77 high from late August. I think that was the triple Q put out its previous high at 382.77. So we settled the week at all-time highs, and we are well on our way to reaching 402.73. 402.73, by the way, is preceded by a respectable intermediate channel resistance at 398.06. So if we happen to test 398.06 later this week, it can contain weekly buying pressures on the way up to what I consider 402.73 to be really kind of a 2 to 3 week target right now, above 382.77. If we close back below 382.77, that neutralizes things a bit. I don't know if we'll fall all the way back to 361.09. Here are some intermediate levels you may trade off of. If you're an aggressive day trader, intra-week trader, swing trader, you obviously have the high at 382.77 that we are now above. That offers decent intermediate support. The low last week, 373.56. The high of the low from 4 weeks ago, 365.69, and of course, you've got 361.09. I don't anticipate seeing that anytime soon. I expect to see that low 400 area, 402.73, before I think this market is inclined to possibly fall back into the lower 360s. And as far as long-term support goes, let's talk of the possibility that this market falls apart this week and closes below 361.09, which I think is a remote possibility. But if so, 346.18 is a long-term support level. That channel bottom goes back over a year of activity and can absorb selling through the first quarter of next year. It's a very similar structure to what we're seeing in the SPY. So I got the daily SPY that goes out, and that's in the, I'm going by memory here, it's in the 418 handle, as I recall. Yeah, 418 and change if you're watching the daily SPY. That is the equivalent in the SPY to the 346.18 channel bottom in the triple Q. And finally, the IWM, the Russell 2000 ETF. We are in this protracted horizontal structure that I think is, I haven't looked at the monthly charts going back years, but I don't remember seeing this market display this for such a prolonged period of time. This is a congestive dynamic if I've ever seen one, the ceiling of which is between 236.21 and more notably the 237.73. That is our breakout to the upside in terms of eliciting a buy signal that should play out well into next year. Until then, we remain trapped inside a horizontal structure, the base of which, FYI, which I'll show in a minute, is well below the market at 205.23. But if we were to close this week, and I think it's a long shot given the relatively anemic volatility right now for the Russell and the fact that the average weekly range, that would be quite a rally this week, but it could happen. And if we did settle this week Friday above 237.73, we have a meaningful buy signal that I think over the next, I'm going to say 2 to 3 months, should yield that full channel extension at 265.03. I use that as a targeting mechanism. That would be the initial target. It's not a great spot to let's put it this way, it's a good place to liquidate some of a long position. It's not a great area in a traditional sense to go short at. I do think that over the course of 2022, if we were to settle above the 237.73 formation, we should, over the months to follow, later 2022, reach that rising channel top at 287.71, which can, by that point in time, contain annual buying pressures. Let's talk downside. Give you a couple more slides here for the IWM. For those of you who trade this for the week itself, near term, just know that 222.58 is a channel bottom. We did slip through it a couple of times over the last month and a half, as you can see, but we did not close below it. And settling below it at the end of this week would be a tipping point to the downside as we move into later November. I would then expect 214.88 within a week or two of that, and we could, over the following couple of months, closing below 222.58, we actually might continue all the way back to what I consider congestion support at 205.23. That is a formation that, if tested, say, between now and the end of December, can absorb selling through the first quarter, and from there we can turn back up to the congestive resistance, which is in the 237.73 area once again. And of course, I don't need to tell you that if we were to settle any week below 205.23, that is significantly bearish for the Russell moving into Q1, Q2 of next year. But we're a long way from that right now. That is all I've got to say for this week's weekly analysis on the DIA, QQQ, and IWM. I will talk to you next week for next week's weekly analysis.